Hello and thanks for watching Proactive New York. Century Global Commodities has released results for the year to end March. Joining me with all the details is the company's CEO, Sandy Chim. Sandy, it's good to speak with you again.
Good to see you again.
So Sandy, as a development company, how should we look at your results?
Very good question, actually, because we are very different from an operating company where people, investors, the community will look for actually operating results, gross margins and top line and the bottom line and so on and so forth. But in a development company, we actually are developing an iron ore mining asset. The cycle is typically long and we won't see production until the project is permitted and then come into production. That would take some time. So during development stage, I think what is very important as metrics to look at is how much cash the company has in the balance sheet, because can it survive? Or does it have to raise money when the timing is not good at a very depressed share price? And whether or not the project is progressing well, particularly in the context of today's market, in terms of the metals prices. I think on both accounts, I think we are very, very happy to report that for this financial year, we're released the result today, this morning. The fact that we got $10 million actually $11 million working capital, close to $10 million of liquid cash and liquid investment. And that puts us as a development company, a junior development company, a very nice position that we know that we don't need to go to the market anytime soon to raise money to survive, to keep the lights on. We've got money enough to pay off the overheads and also develop the project. On top, at the end of the, interview, I was also touch on a counter-cyclical non-metals business, which is contributing cash to the operation. So that gives us a little bit more sustaining power when we develop the project, when timing is a little bit tough. But coming back actually to the question about the metal prices, it's very, very important. We are a mining company. It depends on the mineral that we work at, the prices they are, whether or not it's feasible to actually take our project forward. I'm very pleased to report that over the last couple of years, 2021 calendar years, 2022 year to date, the iron ore mine price has been running about $140, and the year before, the full year average about $160, and actually the prices of production has not gone up by that much. So very strong margin for the sector, and particularly for the big mining operators who are producing most of the product into the market. So that price, about $140, is very, very, very good price for our projects. Our project did a feasibility study, for example, Joyce Lake and PEA some years ago, back in about 2015, based on a metal price of $95 US. And now it's trading like, almost 50% higher than that. And that is sustaining over the course of the last year and a half. So that environment gives us, as the development or junior company, a very strong reason for us to go to the market and keep developing our asset. And in our case, Joyce Lake. Joyce Lake has a feasibility study already done, 2015. At today's metal price, the feasibility study shows a net present value at $440 US iron ore price of $500 million of net present value. And our market cap is trading at only about our cash or working capital position of $12 million lately. It was up a little bit, about $35 million, but now it's down to, because of the recent correction or major volatility in the market, come down to that level. So at that level, I think what we do as a junior company is to look at how we can further finance the project by raising funds. And I think raising that fund the best way, rather than going to the market and use our company's share, sell the shares and raise fund at this low price, we have decided actually a year ago to go actually spin out the asset, because our share price is depressed. The share is tightly held. Not too many shareholders are willing to sell. We've got 85% actually large shareholders who have been holding on to our shares all this time for 10 years and not looking at selling. So to spin out a separate project, in this case, Joyce Lake, can give the company a lot more flexibility, offering an asset in most events, very valuable to the market with the new liquidity back into the project to finance it to go forward.